I'm sure you are tired of using so many ICT concepts. Today, I want to show you how you can take one monthly candle and actually turn this into a daily market maker model. Now, market maker models are everywhere, but today I will teach you them properly. And again, how we can use a single monthly candle to frame buyers for months and weeks on end. Let's not waste any time as usual, and let's dive into this price action here. Now, what do I mean by using one monthly candle? Well, a monthly candle, as you know, takes up 4 weeks usually. Within these weeks, we can find a buyers for each and every single one just by using the monthly time frame. So this video is focusing on the monthly time frame, allowing us to see a daily market maker model. The monthly and the daily link, they intertwine. So when something happens on the monthly time frame, the daily it also happens on, just on a lower scale. So let's see what I mean here. You can see we have a candle that I've outlined. I've outlined the low to the high. What we have done, as you can see, we're on the monthly time frame. What we have done is we've taken out buy side liquidity, and this candle closed inside the last candle. We're in a premium because we are overbought. Okay, the Nasdaq has been rallying up since here, so we are in an overbought condition naturally. The previous candle takes out a high and closes inside this one, specifically the body of this one, as that's where all the volume lies. When this happens, we can predict the next candle will likely take out the swing low here. Not the swing low, sorry, but this candle's first low. So how do we frame this? Well, I'll tell you right now, it becomes a daily market maker model. If we drop down to the daily time frame, quite clearly you can see, and I clean up this chart for you. This is the previous monthly candle high. This is the previous monthly candle low. Let's take this low as a swing low. From here to here, what is this? Quite clearly, this is a market maker sell model. The easiest trading framework you will find, a market maker model. So we have an original consolidation where institutions or the algorithm is building up liquidity, okay, to eventually attack. We then have a level of reaccumulation where the algorithm is reaccumulating longs to go higher and push it to a predetermined price level, which is obviously now the previous monthly candle high. We then have a second stage of reaccumulation inside the actual gap here. We then switch to the sell side of the curve. We need something that is going to confirm the sell side of the curve. We need a closure below up close candle. That's exactly what we get here. As soon as this candle closes below this up close candle, we have a change in the state of delivery. The algorithm should now start to deliver that by sell side liquidity, okay? Because of the framework, we're overbought, okay? We've ran a previous monthly candle high, and now we've changed the state and delivery. Just a really quick one, guys. If you are looking for opportunities to make passive money, please do check out Cryptonomy. Cryptonomy is a venture fund and a crypto credit company. You can hold crypto in here like a wallet or use it as a staking platform to buy or sell crypto as you please. You can see currently I've got an account with these guys, and you can see I've got about 5k USD inside here. In Ethereum, you go over to deposit and you would just deposit your maximum amount of Ethereum. And you can even lock up your crypto for a bit. So if I went over to fixed over here, you can see that they have an interest rate and period up to 153.8% APY. So that is really good for the industry and for Ethereum right now. You can see profit sharing is 50-50. You would just deposit your Ethereum here. You can see in my flexible account, I have 1.1 ETH. You would deposit this, and then you can see the interest rates across how long you locked it up for. So if you took 12 months, you would get about 76.9% return on investment on your Ethereum. You would press continue, read the terms of service, of course, and then agree, and then you would send a request to actually lock up your Ethereum for 12 months, and then eventually at the end of that 12 months, get a return on your investment. So again, I would encourage you to check out Cryptonomy if you do mess with my content and go over and do your research on these guys. Let's get straight back to the video. Let's see where the monthly candle opens up. Once we've taken the liquidity out of the previous monthly candle, the daily becomes a market maker model. Okay? Consolidation, accumulation, reaccumulation, smart money reversal. Now we have our first stage of a market maker sell model, the low risk sell. Despite its name, this is the hardest part of the model to catch, okay? Because we are shorting so high in the range. A lot of people like to skip this, including myself most of the time, unless I have proper sound context. Most of the time I skip this because it is hard to catch, okay? This, when we run up back into the up close candle and then move away, this is our low risk sell. So once we do this, we have our low risk sell confirmed. We also obviously want to mark up our smart money reversal. Smart money reversal, low risk sell. We then drop, okay? Remember what I've taught in previous videos. The buy side of the curve, we want to line up the down close candles with new selling. So where we previously bought, these areas become new areas where we will now sell. Okay, so this down close candle here that was used on the other side for buying when the algorithm was delivering buy side and running price higher, squeezing all sellers out of the market. Where this happened, once traded through, that's the key, once traded through, we must trade through, they are now used on the other side. And you can see we create a swing high. What do? Remember, this pattern is fractalized. We take out a previous candle high, and this candle closes inside the body of this one. We then distribute lower. We then distribute down towards discount arrays. So this gives us our first level of distribution. Okay. The first level of distribution, which lines up with this mitigation block, where we previously bought, so the bookmarks, the algorithm leaves. Any down close candle when we're bullish is a bookmark. The algorithm will refer to this again. Once traded through, why can it not be used as a bookmark on the other side? Because the algorithm still sees it as a bookmark. This line is here because it is the new month, okay? This dotted line signifies the 1st of August. Now, this new month, remember, if we're in the middle of a market maker sell model, we want to see an open, high, low, close scenario. So what happens here, if I remove this, this is the first day of the month. You can see we have a Judas swing above the previous candle high inside of a fair value gap, okay? Displacement, this is the algorithm flashing to you that it wants to drive price lower. As soon as we redeliver into this imbalance, that's the algorithm telling you to get in. This is it flashing, this displacement, okay? Especially when it is the second level of redistribution. The easiest price move you will ever find. Let me repeat that. The easiest and quickest price move you will ever find is the second level of redistribution in a sell model. Reverse everything I just said for a buy model. So we have the context. We have the algorithm flashing to us with its displacement that we want to go lower. We've had the smart money reversal. We've had the low risk sell here. We've had the first level of redistribution. Now we have a second level of redistribution because we've come lower, given a Judas swing higher with the context that we are on the 1st of the month. This candle closed inside this candle as well. You can trade both of these candles down to where? Down to the low here of the previous monthly candle. Okay, remember this becomes our market maker sell model. So one monthly candle provides all the framework you need to have a daily market maker model. Let's dive into another example of a buy side one. You can see here we are on the USD CAD monthly time frame. Now we want to be looking at a daily market maker model. Let's look at the monthly and establish some framework. we've had a rebalance redelivered PD array swept into, sweeping all this sell side liquidity, and we've started to move higher. Remember, we've got an untapped high back here. So we are in a buy program. Zooming into this candle here, we have swept a previous monthly low inside of a buy program. Okay, that tells us we are discounted. Remember, in a buy program, that's the key. This high is still intact, so we've unfinished business. Ignoring what this candle is doing, okay, we can make money inside of this fractal. You don't need to be long-term correct to make money, okay? You do not have to be correct in the long term in order to make money. We can fractalize this bit of price action here and make all our money inside of it. Dropping down onto a daily chart. Remember, monthly to daily. Previous month low, taken out. As soon as we start closing above down close candles, our smart money reversal is confirmed. Let's fractalize the model, okay, and take this high over here as our original consolidation. This is a really choppy bit of price action, but the algorithm delivers the same, okay? I'll point out where the different stages of reaccumulation are, but they're here. You just aren't experienced enough to find them, and that is okay, okay? Market maker models will often look a lot easier than this. They will be a lot clearer than this, like the one we just looked at. The sell model on NQ is nowhere near as hard as this, okay? But for the sake of the video and for the sake of those who want to learn more, I will go over this regardless. I will show you where the levels of reaccumulation are inside of this. So we have a high. We have swept previous candle low and given our smart money reversal because we are closing above down close candles. Now, where is our lowest sell? There, okay? As soon as this candle taps the rejection block here, and yes, it is a rejection block because we cut through candles, okay, is what I'm trying to say. We cut through candles, so regardless of whether we've swept below it and then moved higher, this is still a rejection block. So we have also this wick has traded into this wick, okay? This is a low risk buy. You may not see it as a low risk buy and you may not be buying it, but I am telling you institutions are buying it. So it is a low risk buy regardless of whether you caught it or not. Regardless of whether you see it or not, this is a low risk buy to institutions. Okay, the algorithm is delivering a low risk buy here. A lot of people would see this as the low risk buy, and if that's how you want to do it, that is how you want to do it. I'm not here to deter you from that, but I will say there's a reason why inside here we move with such momentum. Because after that second level of redistribution, or reaccumulation in this case, because it's a buy model, we move with such speed, okay? And this is a second level of reaccumulation. Most people would just see it as a low risk sell and then we rallied. But I'll show you how. Because this is a low risk buy. So, anyway, low risk buy, we move higher, displacement. The algorithm is flashing to us. Remember, another confluence. Look at what we have on the other side. A gap, okay? A gap used on one side gets traded through and it's no different. It's used on the other side. Take out a previous candle low, we close inside the previous one. This one expands along with the others, okay? That is an added confluence. Also, this wick. Look how it lines up perfectly to the pip almost, okay? Anyway, first level of reaccumulation is there inside the fair value gap. Easy enough, right? Now, where is this second level of reaccumulation? The move we're all trying to catch, okay? The move we all want, clearly, because it is this easy, okay? The move we all want, where is it inside here? As soon as we move ahead of this high, now we start to look for it. What's this right here? A few of you may know what this is. It is an immediate rebalance. When we have a candle's high traded through and then the previous candle taps the high of that first candle, the algorithm is delivering price. Buy side, sell side, buy side, sell side. This portion here, all of this fractal This blue box has been delivered efficiently because we've delivered buy side, sell side, buy side, sell side. Okay, so think of a paintbrush. With my private mentorship, I always use a paintbrush analogy. If you were painting a wall, you would go up, down, up, down, up, down to cover all of it, right? Because you don't want a patchy wall. Up, down, up, down, up, down, up, down. Okay, that is what the algorithm is doing. Up, down, and now we can go up because it's covered all bases in here. Remember, like a paintbrush, if you were painting a wall, that's how you would do it, right? The algorithm does the same thing because it is so efficient. Okay, people think this is all coincidence. It is not coincidence. The algorithm is so efficient and coded so efficiently, it does these sort of things. This is your second level of reaccumulation. Okay, so you go into this, as soon as we tap the high, you're buying all of this because we've had the lowest buy first and second level of reaccumulation. As soon as we tap and rebalance this, because we've offered sell side delivery in a buy model in the second level of reaccumulation, which lines up with an up close candle. Okay, do you see how we're building confluences all the time? You would be buying all of these days. Open, low, buy the lows. Okay, this wick you're buying, this wick you're buying, this wick you're buying, so on and so forth until we clear out the buy side liquidity at the high. Okay, now this is a really advanced example of a market maker buy model. I don't expect this to click for you straight away. This is hard. I will give you that. Absolutely, this is hard. Okay, I stared at charts for ages just to find this. Okay, so go mark this up on your own trading views and journal it. That's the important bit. You must journal these discoveries. Okay, I've just given you a lot, and it will be a lot to take in. But I trust that those that see this video will take it in and go and journal these examples. Okay, because it's important. Anyway, I won't fry your brain any further. If you did enjoy the video, please do drop a like and drop a comment letting me know you enjoyed it. Okay, the link to my private mentorship is the top of the description. If you want to become my student, then now is the time. The socials, link to my socials are below it. Check out there. I'm always posting on there and in my Telegram, helping all of you out. Again, subscribe if you're new, drop a like, and I'll catch you in the next video. Thank you as always for watching.